Okay, gonna break down the Nasdaq trade I took today. It was short into the range low. So we're gonna start, as always, looking at the correlated markets. And today I was most interested in looking at the Nasdaq and the YM for correlated market or intermarket analysis. So let's quickly refresh what my draw on liquidity was for the day. I was looking to target this range low down here, this external range low, for one simple reason. And if you looked at my last trade recap from yesterday, you're going to know why I had a bearish perspective of the market on NASDAQ, and I actually had more of a bullish perspective for the YM. So let's start with that bearish perspective. The first thing I want to point out is the fact that we failed to offer support in this internal range of liquidity. I talked about this explicitly in some other videos. You can go back on my timeline or on my YouTube and look at this theory kind of play out. So that means I'm looking for this range low because we failed to offer support inside of this fair value gap. And instead, I'm now looking for the range low that created this high. So this is our dealing range that we're within, and I'm looking to retrade back into this range low. Another target that we now have is this higher time frame discount, right, of this dealing range, right? You can see that's exactly where price kind of stopped today and formed its low. So I had a overall higher time frame bearish perspective for Nasdaq to retrace back into discount arrays. Now, how is this going to form? What I anticipated was for the YM to sweep out this daily high and potentially even the range high, right, before we traded lower. So I was looking for SMT to form at one of those highs. How did I get involved in price? So what I'm going to do is I'm going to attach my executions below, obviously my whole trade recap, but let's take a look at what I was seeing in price and let's use the replay function. So what I want to note is the specific highs I had marked out and the opening range and how we reacted. So we can see, right, 6 a.m. opens here. And first of all, let's look at the daily candle open. So we have daily candle opening here at 6 p.m., right? Open, high, low, close. And you can see that we form a significant swing above the daily high. Now, what is this significant swing? Well, this swing is going to be an SMT divergence with the YM, okay? So we form this SMT divergence above the daily open right here. That's our first stage of divergence. Now, on the equities open, you can see, what does price do? Price comes above and forms this second stage of divergence. So now I have this two-stage divergence right here on my assets, and I can look to trade a reversal from this established swing, right, or high of day. So what do we see happens at 9:30? Well, at 9:30, as this second stage of divergence forms, you can see we come into this internal range of liquidity here on NASDAQ, right? Or sorry, this swing high, my apologies, and we give a sharp reaction lower. So I want to engage price in this distribution lower towards the draw based on this new 4-hour fractal forming a divergence. So this 30-minute swing that's created, I'm looking to position myself in a draw lower. So as I see price open and immediately trade lower, I have my change in the state of delivery, which is the closure through the consecutive series of opposing candles into that key level forming divergence. And you can see here, we have a very large imbalance. So I don't want to be entering the market inside of this closure because the risk to reward here is simply not justified for the range low. It's only 1.3, right? I know I can do better, specifically if I refine this displacement range and take a continuation entry. So what I do is I mark out the opening price of this imbalance that you see here, and I'm looking to trade from this internal range as a continuation lower towards our draw on liquidity, which you can see is eventually met. So how do I structure a trade like this? Well, the first thing I do is I wait for this displacement leg, and now I'm looking to trade a retracement. So now as price comes in and forms a retracement, what do I see? We form new SMT above this swing high. At the same time, if we look at the ES, which is the third asset, we can see the S&P runs out these equal London highs, which was very important for me to see because I did not want to trade a reversal of any of the assets towards this low until ES ran out this high. So this is our Judas swing up in here. And then what do I do? So once I see that SMT form like this, right? Go full screen here. My emphasis is on this being a protected high. And what I did was I positioned myself on the lower time frame, which was the 1-minute chart, inside of this change in state of delivery. So as price broke down here and shifted delivery state, what I did is I used the confluence of that change in state of delivery and this inversion fair value gap to take a sell on Nasdaq at the close of this candle, covering the wick high and targeting the low, which gave me 2R. As you can see, price eventually came in at 10 a.m., formed a new SMT here, and distributed towards the lows. This came extremely close to my invalidation. However, as you can see, it did not actually stop me out. So those who were with me, trading live on my stream, we came close to our stop loss, but thankfully, in this case, the SMT formed here. Had it not have formed there and it swept us out, I would have taken another entry with the two-stage divergence that formed on the new 4-hour candle, as my analyst Jay broke down in his video recap and the trade that he ended up taking today. So this one was pretty simple, right? A nice clean 2R trade. And we can actually see as an extra layer of confluence when we look back is that the rejection block, consequent encroachment, held quite nicely in this 1-minute candle. Of course, I didn't plan for that, and I would have gladly taken an entry right in this inversion fair value gap had I gotten stopped out for the new 10 a.m. power of 3 or manipulation with a new phase of SMT. This would have been the entry I took for that, right? As we close through here, I would have risked this high, and again, I would have targeted these lows. For the trade I took today, if you look at my recap, I actually ended up pyramiding into a more of a position as we came through these lows, and I looked for, again, right, trading towards this draw on liquidity. I took a positional add as well for another R, right? So I hope that trade breakdown makes sense. Let me know if you have any questions, and yeah, I'll see you guys all tomorrow, either on stream or on these trade recaps. Have a good one.